Hi everyone, let's take a look at this bond discount amortization and entry problem. A company issues $20 million of 7.8% 20-year bonds to yield 8% on January 1st, 2009. Interest is paid on June 30th and December 31st. The proceeds from the bonds are $19,604,145. Using effective interest amortization, how much interest expense will be recognized in 2009? Okay, well, let's set up the amortization table and see if we can solve this. All right, we know the carrying, and I've worked this ahead of time just to save some time. We know the carrying amount is $19,604,145. So if we jot in a couple dates, that's what the date is on 1/1. On 6/30, we have to pay interest. And the amount we pay is the $20 million, the face value, times the contract rate, which is 7.8%, or the stated rate, divided by 2, since it's paid semi-annually. So we know that the amount paid is going to be $780,000. Now, interest is calculated by taking the carrying amount of the bonds times the effective rate. So we take the $19,604,145 and multiply it times the 8%, which was the effective rate, the amount we're trying to yield, divided by 2. When we do that, we come up with $784,165.80. Then all we need to do is subtract the discount, which is take the cash paid less the interest, or vice versa, the interest less the cash paid, and we know we're going to amortize $4,165. So then if we take the previous carrying value less the amount discount, we have the new carrying value. Now at that point, we can simply copy this, and we can copy it as many times as we like, but I'll just carry it a few times down just to show you that this would continue to go on. If you copied it all the way down, you'd see that the carrying amount eventually would work its way down from 19,604, and it would eventually make it up to $20 million. Oh, by the way, I think I've got an error here. This has to go the other way. So we take that plus the discount to 608, and it'll eventually go up to $20 million, okay? Because we're amortizing the discount, we're reducing the discount, therefore increasing the carrying amount every time. Okay, so now let's go ahead and put the entries together. Well, on 6/30, we are going to have an entry, right? We're going to debit interest expense for $784,165, and the discount on bonds payable is going to be equal to $4,165 that we've already calculated, and then the last part of this entry is the cash. So we have a credit of cash, and 780 plus 4,165 does equal the 784,165.80. So that entry looks good. Then we have another entry that comes up as well. And let me see if I got all of this down. We write the interest expense comes from the next line now, 784, and the discount this time is 4332, coming from row 7 in our table. And again, cash doesn't change because the cash payment is always the $20 million times the contract stated rate divided by 2, since we're paid semi-annually. And if I sum that, that does equal 784,332.43, so we're in balance. And then the final answer to the question is how much was interest paid for the year, and I'll just jot it in right here. And all you would have to do then is grab these two amounts here to figure out how much interest expense was for the total year. And it comes to be $1,568,498.23. And that is this problem, everyone. Thank you.